Fed Vice Chair for Supervision Michael Barr today outlined regulators' revised proposals for Wall Street banks after industry pushback.
It is critical that banks have the capacity to continue lending to households and businesses through times of stress. Bank capital is a key component of this resilience, and bank capital rules help to ensure that banks are holding capital commensurate with the risks of their activities and the risks that they pose to the U.S. financial system.
So under the new rules, capital requirements for the nation's biggest banks would increase 9%. That's less than half of what was originally proposed. Still, many on Wall Street are dissatisfied with the revised proposal, including our next guest. With us now to discuss, let's bring in Chris Whalen, who is the Whalen Global Advisors Chairman. Chris, thanks so much for taking the time here. So you think it shouldn't have gone this far. Why is that?
The whole focus of Basel is on capital, which is what it's been focused on for 30 years. I think they should have focused more on things like market risk. Silicon Valley Bank, for example, is a case in point. And so, the Fed was caught flat-footed when the industry pushed back. And then since that time, we've had the Supreme Court decision in Roper, which essentially eviscerated any notion of deference to federal regulators. So if the rule is not supported explicitly in the statute passed by Congress, then the federal regulator is vulnerable to losing in court if the industry chooses to sue them. You have a case right now where the industry is probably going to sue the Fed and the other regulators on a rule regarding brokered deposits. You may also see the mortgage industry sue the Consumer Financial Protection Bureau over a revision to the regulations for mortgage servicing. So, the Supreme Court decision has changed the landscape, and the Fed knows it. The Basel process in particular is very vulnerable because it's not really enshrined in U.S. law. It's an understanding among finance ministers that goes back almost 4 decades. More than that, really. And it doesn't have any basis in statute. So if J.P. Morgan decides to sue them over Basel, they'll probably win.
No, that's interesting there, Chris. A lot to get into. I guess my first question is, even though this is watered down, I know you don't agree with it. You're saying it doesn't address some of the risks or it doesn't address the issues that need to be addressed. But what we have here, how big of a challenge is this going to be, given the fact that we did see this watered down version versus what had already been priced in?
Well, the capital piece that you just referred to in that piece from Barr is a big part of it. The large banks were not happy seeing a 25% increase in capital because they don't need it. These banks are giving back capital to investors every quarter. In fact, they would like to give back more. The banks are under-levered in terms of opportunities. And most of the new business expansion, where has it gone? Non-bank finance. You guys have been watching that process along with me for the past 5 years. So I think that the regulators are still not looking forward to future risk. They're looking behind. And there's so much detail that has not been addressed yet by Vice Chairman Barr and his comments that I think the industry would like to see the Fed junk this entire proposal and repropose it. The Republicans in the House have already said that. And I think if you see Trump win, this whole Basel rule process is going to go by the wayside, and we're probably going to start again. I have said for a long time the U.S. should withdraw from Basel. There are so many points of friction between Europeans and the U.S., particularly in areas like housing finance, that I just don't understand why we're trying to make our banks fit into their world, which is very different.
Chris, what do you
Europe
think
is about government finance, basically.
What do you think it would look like then, more specifically, under Trump? Any of
I
this?
think you would probably leave capital rules where they are.
Yeah.
I think that you would see less effort, led mostly by the Yellen Treasury, to limit banks lending to non-bank financial companies. There's a big proposal buried inside Basel that has not gotten much media attention, but it would severely hurt the residential mortgage sector. So there's a lot of pieces to this that don't make sense. And just reproposing it, I think might not be adequate. I still think you might see the industry fight, believe it or not.
I mean, Yellen probably is not going to be there most likely as well. So
No.
this would be under a different Treasury Secretary most likely. There's much more to this
Yes.
conversation. Chris, we got to leave things there on the day. Chris Whalen, who's the Whalen
Have a great
Global
day.
Advisors. You too, Advisors Chairman. Appreciate it.